What's up, traders? Welcome back to Forex Life. I know it's been a while, but we're back with a brand new strategy that will help you guys in catching spikes on boom and crash 500 and 1000. If this is your first time on this channel, please go ahead and click that subscribe button. Turn on your notification bell so you can get notified when the next video will be dropped, and also leave a comment below and let me know what you guys think of the strategy. Okay, so this is a very simple strategy. I always try to keep it simple for you guys, but remember, with every strategy that you use, trend is your friend. Always go and check the trend on the 1 hour time frame, on the 15-minute time frame. Have a look and see what's happening in the market. Always follow the trend, guys. But nonetheless, let's jump straight into this video so we can start making money. Remember, I do have a signals group available as well. It's currently running on special for $30 till the 1st of April. I have another special running at $50. If you pre-book for April, you will receive the Forex Live Spike Detector absolutely free. Click down below in the description. I'll leave a link to my Telegram group. Go ahead and join the free Telegram group. You can also chat to me privately on Telegram as well as WhatsApp. I'll leave all the details below. So let's get into this. Everybody wants to catch spikes, right? You want to trade the trend. Trend is your friend. You want to scalp as well. So in this video, we're going to be focusing on catching the spikes. Remember, no strategy is 100% perfect, but we try to make it as accurate as possible. So this strategy is about 90% accurate. You will occur losses. There will be losses. There's always losses in trading, but we will catch most of the spikes. Okay, it's all about patience, and you only catch one spike and you leave the market, or you place your stop loss into profits, and then you go ahead and you continue with the trade and just adjust your stop loss and lock your profits every time another spike comes and another spike comes. So with this strategy, we only have two indicators. Okay, but before we move over to the indicators, let me tell you guys about the zoom level, because this is a question I get asked all the time. So this is your lower zoom level, right? It's your lower zoom level. All you want to do is you want to zoom out twice. So you want the third zoom level. So you're going to go 1, 2. Okay, I'll do that again. So it's your lower zoom level, and you're going to go 1, 2. That is the zoom level that you will be using for the strategy. You'll also notice that I made the strategy non-repaint, which means these lines here at the bottom, it won't move when you move the chart. As you can see, it stays the same, so you know when to get the perfect entry. It will not move. Okay, so let's start. We can start on boom 1000, for example, and then I'm going to give you guys the indicators. So the first thing you want to do is you want to tap on your screen and you want to click on this little F icon over here. Okay, so once you click on the F icon, it will bring you to this window, and you'll see it says indicator window 1. You're going to click on this little F plus sign over here. Once you click on that, you're going to look for relative strength index, which is over here, which is your RSI. So you're going to click on relative strength index, and this is the parameters that I want you guys to use. So period 10 and apply to close. Now under styles, the pixel will be 1 pixel, and my color is white because the chart, the background of my chart is white. So if the background of your chart is black, you make it black. Okay, and then these are the levels that we're going to use. So I want you guys to take a screenshot of this, write it down, and put in these levels. We have level 10, 20, 50, 80, and 90. Under style, we have 2 pixel and we made it black. So once you load that onto your chart, it should look like this at the bottom. You see we have our levels 10, 20, 50, 80, and 90. And the black lines is our 2 pixels. Okay, that's our black lines, which will indicate our levels to us. Then what you do is you click again on the little plus icon over here with the F under indicator window 1, and you're going to look for stochastic oscillator. Okay, you're going to click on stochastic oscillator, and these are the settings you're going to use. Okay, so your K period will be 10, Your D period will be 5. Slowing will be 5. Price field will be low high. Method simple. Under styles, main, you're going to make the color of your background on your chart. If it's white, it will be white. If it's black, it will be black. And signals will be 2 pixel and it will be red. Okay, now under your levels, you're just going to have level 20, 80, and 50. And your style will be 2 pixels and the color will be black. Once you're done with that, you click on done and it will load into your chart. And this is how it should look. Okay, this whole window at the bottom with your 2 indicators is what's going to help you to catch spikes. So for this strategy, my recommended stop loss, it will differ based on account size, but I will say anywhere from 10 to 15 candles per trade. Okay, that would be my recommended stop loss for the strategy. So what are the confirmations to take the trade? Of course, it will always be the trend, so you can see which way the market is moving. And then your stop loss, of course, your 10 to 15 candles. And over here, once we see the stochastic oscillator for boom, okay, these are for the boom pairs. If we see the stochastic oscillator reach level 20, okay, once it reaches level 20 over here, you can see it reach level 20, we will then place our buy order. Okay, so right over here, once it crosses level 20, we will place our buy order. And let's see how much candles that took. That took 15 candles and we caught that spike. Okay, remember level 20 is where, once it crosses level 20, it reaches level 20, you go ahead and you place your buy order. So let's go back and we can see this would have been a losing trade. This would have been a losing trade. This took 23 candles, but it's fine. Our losses are not big. If we keep our losses small, our wins will then cover our losses. Okay? And we can see that this is clearly in a downtrend as well. But let's have a look over here. So it reached level 20. And what happened? We caught this massive spike. Let's just go back and check some more trades. Reach level 20. And you record that spike over there. This one over here, you record this spike. We go over here, reach level 20. Let me just move the chart a bit. So it reaches level 20 over here. You enter your trade. And 12 candles later, you catch this spike. You catch this spike over here. And we just keep moving and we keep checking. So over here, you would have caught this spike, but it wouldn't have bring you into profits. Okay, once the spike happens, you close. So you're close on a very small loss on that trade. Over here again, this would have been a very good entry. I'm going to catch that spike over there. There we go again. And you're going to catch this spike over there after 4 candles. Okay, so remember, all you need to do for boom is to wait over here. You wait for the stochastic oscillator to reach level 20. Once it reaches level 20, you place your buy and you wait 10 to 15 candles. If there's no spike, you go ahead and you close. Okay, you close your trade and you wait for the next opportunity and you will catch the spike. It's all about patience, guys, and remember, the trend is your friend. Okay, so let's just go back and let's just see where we can find some good opportunities. So over here, you would have entered over there and you would have caught that spike. You would have caught that spike. If you place your stop loss in profits, like I said, you would have caught that spike and that spike. Let's check. So it crossed over here, and that's a small spike. You would have closed. You would have closed the trade, because remember, one spike and we closed. We would have missed this, but that's okay. There is lots of opportunities in the market. We don't need to catch every single spike. Okay, so you would have entered over here and you would have caught that spike. You would have entered over here and you would have caught that spike. So this is on boom. It works the same on boom 500. Okay, let me just move this thing. It works the same on boom 500. So over here we would have entered our trade and it would have hit our stop loss of 15 candles. That would have been a losing trade over there. And then over here we would have entered our trade and we would have caught these spikes. We would have caught these spikes. What is our confirmation? It needs to cross level 20. Okay, over here again, so here on level 20, you'd have entered the trade over there and you'd have catch that spike. So this is how it works on the boom pairs. Let's have a look on boom 300. Same concept applies on boom 300. Just remember that boom 300 and crash 300 is very, very volatile pairs. So reduce your risk, reduce your stop loss. Only if you have a big account or you're using a hack lot, keep your stop loss 10 to 15 candles. But boom 300 and boom and crash 300 moves really, really fast. So you'd have entered over there and you record that small spike over there. Would have entered over here and you'd have caught these spikes. Entered over here and you'd have break even on that trade. You would have entered over here at this one and you'd have caught that small spike over there. But as we can see that it is in a downtrend, so you'd have entered over here and you'd have caught that small spike there. You'd have entered over here and you'd have broken even, a small loss. You'd have had a small loss on that trade. So remember what I say, guys. I always say the trend is your friend. Okay, the trend is your friend. So over here you'd have entered and you'd have caught that spike. Over here you'd have entered and you'd have caught those spikes. So that's how it works on boom. Same concept applies on crash. It's just the opposite, of course, on crash 1000. So here currently we can see we would have entered the trade over here and this would have been a loss. Okay, this would have been a loss and we can see that the market is in an uptrend. Okay, the market is in an uptrend, so it will be difficult to catch those spikes because you would have a lot of drawdown. But let's just backtest it and have a look. So we know the market is in an uptrend over there. So let's just check it out. So over here it crosses level 80. So for crash, you wanted to cross level 80, touch level 80 is your first entry. If it crosses, you can always add a second entry as well. All depends on your equity that you have. Okay, don't over leverage on any trade and keep your stop loss 10 to 15 candles. So over here level 80, you would have entered over here and you would have caught this spike over here. You would have caught this spike, so you would have broken even on this trade. It's major uptrend. The market has been in an uptrend for a very long time. But over here, it's another entry. You would have entered over there and you would have catch these two spikes. Nice crashes over there. Would have entered over here. Would have broken even on this one again. Another break even trade. Break even is better than a loss. Over here you would have entered and that would have been little profits over there. Tiny profits. Let's see. So you would have entered over here and that spike would have happened. It would have been a loss. unless you've checked the trend and you knew that another spike is coming, you could have held your trade. Remember, don't just take trades based off any strategy. Always apply price action to any strategy that you are using to get the best results, okay? So you'd have entered over there and you'd have catch the spike over here. And you would have entered over here and you'd have caught these. Let's check crash 500. So over here, you can see major uptrend, but okay. Would have caught that one, would have reduced our losses. Would have entered over here, and then you would have caught those two spikes. Would have entered over here, would have break even on that spike over there. Over here, catch that nice spike. You would have entered over here and catch that nice spikes over there. So as you guys can see, this is how it works. You would have entered over there. That's a nice fall that you could have caught. But remember, one spike and close or place your stop loss in profits. Okay. So I hope that this strategy will help you guys. Remember, nothing is 100% accurate, but use it with the knowledge, combine it with the knowledge you have. If you don't have any knowledge on trading, feel free to message me. I have a course that I have currently, the Forex Life course. It only costs $75, guys. So I hope that you guys make money with the strategy. Comment down below, like, subscribe, smash the notification bell, and I'll be back soon with another awesome strategy. See you guys soon.